You look at a Amazon data center, and if it costs them, 200 million or 100 million to put that up, about 30% of that is going to the memory guy. It's a tax on all the streaming, all the e-commerce, all the shopping, on everything. 30% tax. I'm sitting collecting the tax.
Why did Mohnish Pabrai invest into Micron, and why is the stock currently down? Well, in this video, you guys are going to find out. I'm Ben, and welcome to Motivation to Invest. So who is Mohnish Pabrai? Well, Mohnish Pabrai is a legendary value investor who's been known as the Indian Warren Buffett. He's famous for his lunch with Buffett, which led to him becoming great friends with Charlie Munger, and also the great Chinese stock investor Li Lu, who is also very highly regarded by the great Charlie Munger. Right guys, so the stock we're going to dive into in this video is Micron, ticker symbol MU. Now this is the fourth largest semiconductor company in the world, and they are the leading provider in RAM. So you might have seen this in your laptop, and basically random access memory. The reason this is really interesting is Mohnish Pabrai loaded up on this stock, which I did cover on this channel, in the fourth quarter of 2021. And Mohnish Pabrai is the type of investor who really does like to go all in if he finds a stock which does tick his strict criteria. And Micron is one of them, which now makes up 99.84% of his US portfolio. Now that's a clear distinction to make there, because he does have a few international stocks. But he was paying an average price in the Q4 2021 of $78 per share. Now the stock is currently trading at $53 per share, and thus is 30% lower than his average buy price. Okay, so first let's dive into Mohnish Pabrai's most recent thoughts on Micron stock, and then also I'm going to dive into why the stock is currently down. So that being said, let's dive in.
Current portfolio, the largest position we have is Micron Technology. It's in the memory business. And for the longest time, the memory business for decades was a terrible business. Boom and bust, too many players, someone innovates, cuts their cost in half. Now all your inventory is, the price of your inventory is above the selling price, and you're losing money while they're making money hands over fist till you catch up. And maybe you can catch up or maybe you don't. And it was all of that going on, Moore's Law, and prices declining, till we hit a point where we were left with three players. And the game changed. Now, everyone saw that there were three players, but they had so much history and pain from the decades in the memory business that they refused to believe that anything was going to be different. It's completely different. So the thing is that if you look at a Amazon data center, and if it costs them, 200 million or 100 million to put that up, about 30% of that is going to the memory guys. It's a tax on all the streaming, all the e-commerce, all the shopping, on everything. 30% tax. I'm sitting collecting the tax. It's in an industry with rapid change, so we'll see. The thesis is still playing out. We will see how it works, but I like the, upside downside scenario.
Okay, so that's some really interesting stuff. It's pretty clear Micron is a leading semiconductor company, and they really are a market leader in RAM technology. So why is the stock currently down right now? Well, the company actually produced strong earnings in the first quarter of 2022 with revenue of $7.69 billion, which was up from $5.77 billion in the prior year. And they reported non-GAAP earnings of $2.59 per share, which actually beat Wall Street expectations of $2.44 per share. So why is the stock down? Well, it's all about management's outlook for the up and coming quarters. So Micron's CEO actually stated recently the industry demand environment has weakened and we are taking action to moderate our supply growth in fiscal 2023. So Micron actually announced guidance of non-GAAP earnings in the range of $1.43 per share to $1.83 per share, which is lower than the Wall Street average estimate of $2.62. So basically this just means industry demand is starting to slow down. Now personally, I believe this is only a temporary phenomenon, but let's dive into this a little bit deeper because there have been two analyst downgrades. So according to an analyst from Summit Insights, he's lowered his rating to a hold from a buy on Micron stock as he no longer expects the memory market's demand supply dynamics to improve this year. And he states, although there have been continued demand from data center clients, which Mohnish Pabrai actually reflected on, industry checks indicate persistently sluggish demand from smartphone customers and a continued decline in PC client demand. So there's basically demand issues and possible capex cuts from these large data center providers. And recent industry checks actually confirm that there's elevated memory inventories at many Asian suppliers. And this basically means that they've got all this inventory of these memory chips piled up and it's not selling currently. There's not the demand there as there is usually. Now, according to this analyst, Micron might have to reduce its prices. This could hit its gross margin as the price decline could outpace Micron's cost reductions. Now, of course, that's just a couple of industry analysts, but let's take a step back, let's zoom out and look at the total semiconductor market. Now, that was valued at $680 billion in 2022 after revenue soared by 25% in 2021, according to IC Insights. Now, the first for semiconductors is not going anywhere. We've got cell phones, we've got portable technology, we've got Apple Watches, 5G, and even IoT or Internet of Things devices. Now, Micron makes 71% of its revenue from DRAM, dynamic random access memory, and 26% from NAND, which is used in solid-state hard drives, SSDs. These have many applications including computers, mobile, automotive, and of course, cloud data centers, which Mohnish Pabrai spoke highly of. Now, an interesting point which I discovered is 5G cell phones are actually an interesting tailwind as they have 50% higher DRAM, dynamic random access memory, and double the NAND content versus traditional 4G phones. So the industry is expected to reach $337 billion by 2025, up from $108 billion in 2021, according to Juniper Research. Okay, so what about the valuation for Micron? Well, what I've done for you guys is I've plugged in the latest financial details into my valuation model. So previously in my valuation model, I predicted a 25% revenue growth for next year. But what I'm going to do is, guys, for you, I'm going to reduce that massively down to 15%. So very conservative given the market outlook. Now, everything else I'm going to keep the same. Given these factors, I still get a value per share of $128 per share. The stock is currently trading at just $53 per share, and thus it looks to be nearly 60% undervalued right now. Now, that's with reduced outlook. We can reduce this even further, even if we expect, let's say, 10% growth for next year, 10% for the next 2 to 5 years. Still, the stock looks to be undervalued. So personally, if you are a shareholder of Micron, it doesn't seem like it would be a major issue holding this stock for the long term, especially given the global macroeconomic tailwinds around the semiconductor chip industry. But I do think there will be some short-term headwinds, at least within the next 1 to 2 years. But that's today's video, guys. I hope you did find it valuable. If you're new around here and you haven't subscribed to the investing family yet, feel free by hitting that subscribe button, turning that notification bell on. We cover deep dive investing analysis on different stocks and also real estate. So if that's something you're interested in, feel free to join the family. If you did find value in this video, feel free to give it a big thumbs up. It helps out tremendously with the channel. With that being said, thank you guys so much for watching. I hope you all have an incredible day, and I'll see you guys in our next video. Keep growing.